So without further ado, let's get into the hot topic segment for today. And I'm really excited to have with me someone that I've known for many, many years, someone I've admired for her leadership and just getting out there. Regina Lowry, it's so good to have you joining us today.
Thank you, Dave. I'm glad to be here. Thank you for the invitation.
Well, it's a real honor. Regina is the president and CEO of Dytrex. Dytrex, again, is a financial company, technology company that enables secure financial transactions for institutions through their Dytrex platform. We're going to be talking about that today, and I'm really interested in getting into it. You know, Regina, you have a tremendous background in mortgage banking. All of your accomplishments. You're the first woman to become the president of the MBA after forever. I mean, I think you've been around at that point, I think, 93 years. You are also involved in many pivotal initiatives in the industry we were talking about before the podcast went live, and you were instrumental at the beginning of MERS, and you look at what that has done. You look at what's going on at the MBA leadership and all the things that you've been behind the scenes. You are also one of the founders of the Mortgage Collaborative. I mean, all of these are very, very impressive. But I got to tell you, your best work that I'm thinking is going to have such a transformative effect in the industry is what you're doing at Dytrex. So I'm really excited to talk to you about that.
Thank you, Dave. Well, it's pretty exciting.
Yeah, let's get into some of the stuff. Last month, you issued a press release that really caught my attention. You were prepared to wage war against financial transaction fraud. Talk about this war that you're waging.
Well, Dave, the mortgage industry right now is facing what I call a wire and identity fraud crisis of epic proportions, and it continues to get worse. $12.5 billion of reported losses were attributed to wire transference intercepts, and I've had many conversations with the FBI and their white-collar crime division as it relates to business email compromises. Just this year, they expect $18 billion in attempts. And that's just year to date.
$18 billion in attempts?
Yeah. And between 2016 and 2019, it was $90 billion in fraud attempts. And our industry is really just at the heart of wire fraud and identity fraud because we've got so many parties involved in one real estate transaction. So I use that strong language because I think we as an industry really, it's a wake-up call. It is totally a wake-up call. You and I have been in the business a long time. I had my own company. And, you send out a closing package to a closing agent that you've never vetted or qualified, and it has all the borrower's MPI data, their Social Security, their income, their assets, their credit. And then, oh, by the way, we wire hundreds of thousands of dollars to a bank account that we don't validate. And there's people sitting in India, in China, in Dubai on laptops that are following that real estate transaction from point of sale till it closes. And so we're really victims of something that continues to grow.
It is. The numbers are staggering. The reported, I think you said FBI losses between 2013 and 2018 were $12.5 billion. And that's just $20 billion in 2019 in attempts alone. That's just, what are financial institutions and lenders doing to protect themselves from this onslaught? And I guess this is best characterized as cybercrime, is it not?
Yes, it is. It is. And
so how are they protecting themselves?
Issue. Well, I'm going to say surprisingly, not many are doing anything. I think companies in three buckets that I'm seeing over the last 4 years, those that really don't understand the risk, that's the first bucket. The second bucket are those that understand the risk and they're trying to manage that risk. And it's a daunting task because you may have two credit companies that you deal with, but most lenders have hundreds, if not thousands, of closing agents that they deal with. And so they're doing it manually. And when I first, 4 years ago, started helping a client of mine who was under an audit from the OCC, it was a fairly large regional bank, And they had a pretty robust vendor management program, but they weren't doing anything to manage closing agents. And that's where it all started 4 years ago. And then as this incidence of wire fraud continued to grow, I thought, we have to find a way to be able to validate those wiring instructions in seconds, not minutes, not days, but in seconds. And that's what Dytrex is doing right now, and helping lenders not only manage closing agent risk for data privacy violations, but also to validate where they are wiring the funds.
That is so important, validating it, and you really get into doing just that. And there's some others out there doing something similar, but they're not going to the steps that they are. Alan, I want to get you on. I want to talk about the email, how easy it is to compromise emails. So if you could get into that discussion with Regina, please.
Sure. Actually, Regina has it going. And I was super excited to hear about the topic today because, I've talked in the podcast in the past about, there's people that you mentioned out there. There's so many of them, and what they've done is they've gained unauthorized access to email accounts, and they monitor, right? They may have had access for a year, and they just monitor, and as soon as they see that there's some type of financial transaction about to occur, then they start to track even deeper. And eventually, they figure out who to fish against if they need to. And ultimately, it happens every day, and most of us know somebody that knows somebody this has been attempted to, like you mentioned, or that's actually happened. And what they do is they ultimately pretend that they are somebody in the party, whether it's the attorney or the title agent, and they say, I'm going to need you to wire the money right away. It's that simple, right? And it's happening every day. So that's I can't urge enough how important technology is in that transaction. So with that, I'll turn it over to you and let you talk more about what you're doing over there.
Well, you're right on the money, Alan. I mean, they are following the transaction from the point of sale. So and we know the lenders have a secure network, and they're doing phishing exercises and they've got firewalls. But when you look at a real estate transaction, the selling agent, the listing agent, the closing agent, most of them are operating on an unsecure network. So it's sending it to maryjones@gmail.com at some RE/MAX office, right? And so once they identify that an agreement of sale has been executed, they follow the emails traffic, okay? So they see the emails going from the selling agent to the loan officer to the borrower, and they can hack in as the transaction continues to move forward and they're following it, whether it's 2 weeks or 30 days. They're able to see when that loan gets approved, and they start watching communication from the closing agent to the lender. We've had instances where we caught where the loan officer's email was compromised because of contact with the selling agent or with the borrower who's on an unsecure network, and they know that the loan was scheduled to close. And the loan officer got an email that said the wiring instructions had changed. And we all know what it's like at the end of the month, especially now with volumes up, where the loan, we're at the 11th hour. Most lenders are closing 25 to 45% of their loans in that last week of the month, and it's a crunch. Loan comes out of underwriting, it gets committed, it cleared the conditions, it gets a rush closing, and the closer gets an email that says, and it comes from the loan officer, or it looks like it comes from the loan officer, or it comes from the closing agent, and they change the wiring instructions and wire the money to a fraudulent account. Within minutes, the FBI says that money's converted to Bitcoin and it leaves the country. And in most instances, it can't be recovered. And the response I get from lenders is, well, we have a closing protection letter, or we have E&O insurance, none of which cover wire fraud. And even companies that have cybersecurity insurance policies don't realize that there's a provision in those policies that say, if you were the one, if the lender has a bank has a cybersecurity insurance policy, and their employee is the one that sends that wire, okay, that will be excluded from coverage. So it's a total loss. It's a total loss. But, you also have to think about the consumer. So it's, it's not just a loss to the lender or to the warehouse bank, but the customer shows up at the settlement table and the money's not there. And in most cases is not recoverable.
That's the scary part. That non-recoverability about that, and there's really no insurance, especially if you're the one that really got there. Alice, I want to get over to you. I think when you look at closing protection letters and there's areas in that area that I thought I'd let you get into and ask about. What are you doing at Union Home, and what are you drawing from this?
Well, first of all, I hope everybody's doing what we call listen to receive, because, there's a lot of this that people say, oh, I'm doing these things, I'm training my people, I've got all the systems in place like Regina, you just talked about. But I think you have hit on a few really important points here at the end that a lot of this is out of our control. Our insurances don't cover us as lenders for all the extent that we do. And I would love your help, Regina, in understanding exactly what your service does, because of all these things that are out of our control at the title agent level. How do we get control of that? For exactly what you said, people want this transaction to happen fast. They go, oh, yeah, they're a great title company. So even if you have some minimal vetting process, how do we manage that, right? So what does the service do for us to help us make sure we minimize losses or don't have any losses there?
Okay, well, it's really twofold. The first is that we're helping to qualify that closing agent. So we're making sure that they have their E&O coverage, and it's all outsourced on a SOC-compliant platform. So at any point in time, your employees can go in and look up a closing agent and see whether or not they're qualified. And if they're not, they reach out to us. We certify they're complying with Alta's best practices. We are collecting their E&O. They upload it to your portal. They upload their license. They sign a confidentiality agreement, which gives you recourse for privacy violations with the borrower's NPI data. And most importantly, then, the closing agent completes their bank account information and uploads it to the portal. And within seconds, we go out to a waterfall of national databases to validate and confirm the routing number, the bank account number, the bank account owner. We get alerts on risk activities, risk alerts, if there's been any NSFs on that account, if the account was just recently opened. If it's less than 90 days old, that's a risk alert for us.
Wow.
Because the FBI says these fraudulent bank accounts are opened by a lone wolf in the United States, okay, for the sole purpose of one wire. Once that wire hits, that account is closed. And as I said, the money leaves the country. But we've even gone one step further, which I think, because you look at the business email compromises and the fraudulent emails that lenders are receiving. So we are not only validating that information, but we are authenticating where you're sending it. And what I mean by that is the owner of the account is the intended recipient of the electronically transferred funds. And then we go one step further, and we call it identification. So if we get any fraudulent alerts, we can go in and check business data records to compare it against the data that's being provided. And we go one step further, because when you get a fraudulent email, you're usually going to get a phone number to call. And we validate that phone number. We validate that closing agent's email address, the domain of that email address, and the country that email address is coming from. So clearly, I like to call it a waterfall of risk mitigators that we go through to make sure that when that money gets wired, it's going to a valid account.
So that's amazing. It really does start to close the loop then on where the gaps are. So that's terrific.
Yeah, Alice, I would also say to you, there are many companies out there that are actually calling to validate the bank account information. So that takes a lot of human resources to do that. But if you're calling the wrong number, or if you're validating every wire by phone and one happens to be a fraudulent email, you can't really go into a court of law and try and defend that because most of these go to litigation. And that's what a lot of people don't realize. You're years in litigation for one fraudulent wire. And if you are not recording that conversation, just like you're recording this podcast, Dave,
right.
It's pretty hard to defend that you tried to protect the consumer.
Yeah, really good point. Alice, are you doing these kind of things there at Union Home? Sure
we have
you are.
a lot of those things in place, but certainly, the systems to do them efficiently and the depth at which some of the things that you're talking about are things that sound really valuable. And I'm not privy to absolutely everything on that side of it, but I know we have quite a few similar systems in place. So I'd love to hear more about it. We'll call you after, Regina.
We're going to get we'll give Regina's information out in a little bit here. How many lenders, especially financial institutions, have cyber insurance? And talk about cyber insurance, E&O insurance, what it does and doesn't cover. You talked about that a little bit earlier, touched on it, but if you could go into depth a little bit more on the insurances and what they don't cover.
Great question, Dave. First of all, the E&O insurance typically it includes an exception for privacy violations. So,
right.
And I would say most lenders, and I'm probably going to say close to 100% of lenders, are collecting an E&O insurance on every closing, which is a very manual, daunting task. The agent's E&O insurance covers agent's mistakes. So it's not going to cover the lender for their employee wiring the money to the wrong account. Okay, and the closing protection letter really is only going to protect them if the agent doesn't follow their instructions, which has nothing to do with where the lender wired the money. So it doesn't cover the issue of lender mistakes and sending funds to the wrong place. And then as it relates to cybersecurity insurance, most of our industries, we've got a lot of small, mid-sized lenders that the cybersecurity insurance is pretty costly. So I'm really just seeing that in the large institutions, the banks, the warehouse banks, and we're working now with several warehouse lenders that have been because they're relying on the lender sending them an email that this is where you're wiring the money. So they are manually validating that bank account information before they wire the money out. And they do have cybersecurity insurance, but like I said before, there's an exclusion in most cybersecurity insurance policies that if your employee was the one that sent the wire to a fraudulent account, that will be an exclusion in the policy.
Wow.
And I can actually cite a case. It was Aquastar versus Travelers Casualty and Surety, in which the insurer's exception was affirmed by the courts. So this is a court case where the employee of the insured institution got a bogus email, changed the bank account information on the insured system as to the directions for the wire transfer, and Aquastar lost $729,000 before catching the error, plus the legal expense to litigate it after 2 years, and then they lost.
And then they lost. So by the time
lost.
you put the attorney, and by the time you put the attorney fees in over there, and then you're over $1 million, and it's just crazy. Joe Farr, I want to get you in on this as a former business owner, CEO, CFO, CPA. This has just got to get your attention in the biggest way. Your thoughts?
Well, I'm wondering about the logistics of this, and like you do a lot, Regina, and is there any delay in the process in the transaction to accomplish this?
That is a great question, and on a single inquiry, so lenders where we're managing all of their closing agents, that the bank account information is validated at the time that the closing agents qualified. And it happens in less than 30 seconds on an individual query. For warehouse lenders, we're doing it in a batch. So we can do a batch of 1,000 in less than 10 minutes. The one thing that I think was very important to me is that it had to be real time. We had to be doing this in real time. And second, We had to do it and not delay a closing. So the fact that, if a lender gets let's give an example. A lender has a database of qualified agents, and they get an email. The closer gets an email. At the 11th hour, she's doing the closing papers. The wiring instructions have changed. She looks it up in the portal, sees that it doesn't match what was previously validated, and then sends us that information, and in less than 30 seconds gets a response back from us. So that was a critical strategic objective. One was that it had to be real time, and two was that being a mortgage banker for 35 years, I know. I mean, the closing is your last chance to make a good impression. And not only getting the papers there, but getting the money there. So, and you look at the reputational risk, really, because, and as this grows, and when we talk about the staggering numbers from the FBI, it will not be too long before the regulators start seeing the growth of this fraud. And we all know it's all about the consumer. What is our industry doing to protect the consumer? They go to the settlement, the money's not there, they lose the house, they lose their down payment money. It's a travesty. It really is. And the minute that this continues to grow, and that's why I'm so passionate about it, Dave. I really am. I mean, I'm as passionate about this today to make a difference. A lot of people have said to me, why haven't you retired? And this is an issue that I am bound and determined to make a difference in our industry, to protect lenders and to protect consumers.
Yep. Virginia, another question.
Go ahead, Joe.
Real quick, was what happens if that money, the first wire's sent to the wrong place and the transaction doesn't have the money necessary to close? Is the lender obligated to immediately turn around and send the same amount to the right place?
The cases that I've read, that has not happened. That has not happened. I mean, fortunately, we have never had an issue where that happened, where we validated the funds. Generally, it ends up in litigation. And the cases, there was a case in Colorado. It was, and this is public record, so I'm not saying anything out of it. It was Envoy Mortgage. It was Wells, a selling agent, the listing agent, the closing agent. They were all listed as defendants. Okay, and it ends up in litigation because the borrowers end up suing.
Yeah, understandable.
And we talked about all the insurances. So, the lender, that money's lost from the lender's perspective. Everybody in the transaction gets hurt.
Staggering. So there are a few other companies out there providing lenders some services that are similar to this. At least they validate the bank accounts, where the lender may wire funds. But you do this differently, and this is the part I want our listeners to hear about, and we want to get out our contact information. Alice was waiting for it, and we want to get it out to all of our listeners. So how is Dytrex different? How do you do such a good job of protecting the consumer, all the parties involved?
Well, from the lender's perspective, first of all, I think it's cost effective because it's outsourced. And as I mentioned before, lenders have thousands of closing agents, okay? And that's a daunting task. They don't have to collect the E&O on every closing because it's in their portal on a SOC-compliant platform. They've got the license. We manage their portal. 30 days before the E&O expires, we're updating that.
Oh, you're managing the portal?
Agent.
Oh, that's an important distinction.
The portal for them. Yeah. So think about the information that the lenders that do understand the risks that are doing this. I mean, there's a cost involved for them doing it. The other thing that is very different is that the wire validation is in real time. It's not stale data. It's not a database that we've built of bank account information. It is we're validating that account in real time. And then the other thing that's different is we're not just validating that the ABA routing number is a U.S. bank and that we're confirming the bank account number and confirming the bank owner. We go one step further, and we look at we get the bank activity. So we get risk indicators. We can tell when that bank account was last changed, anything was changed on it. We can identify the domain of the email of the closing agent, and we validate their phone number. So I like to call it a waterfall. And if there's still risk alerts that we're getting, then after we can validate business data records for that closing agent, because we all know how easy it is for these cyber criminals to steal identity. And that's what they do. They steal the identity of the closing agent, and then they go ahead and open up a bank account with all that information. But there's certain things you can't change: business identification numbers, SIN numbers.
Right.
So I like to call it a waterfall.
It's a good term.
And layers of risk mitigators.
Yeah, but there's another factor. I was talking to my good friend, our mutually good friend, David Kittle, and I understand that you have an insurance that if it's run through your system, you cover any losses if by somehow it made it through your waterfall effect. Is that correct?
That is correct, yes.
Talk about that.
Optional.
So it's an optional thing. Okay. Okay.
It's an optional because and that's why we went to validation, authentication, and identification, because the insurance is an additional cost. And, I'm going to say we can manage a closing agent for a lender and do the wire validation, depending on their size, for a fairly low cost. But when you add the insurance on, and we all know the cost to originate is a very sensitive topic for, what's the cost now? It's over $10,000 or $8,000 to originate.
Yeah, $8,600, $900,000.
Yeah.
I mean, $600.
So we built all of these additional, what I call risk mitigators, to protect against that happening. But the lender always has the option to purchase an insurance. Yes.
Well, let's talk about how people can get a hold of you, the website, and all the information.
Okay. Well, it's my email address is rlowrie, Lowrie, at Dytrix.com, Dytrix.com. Phone number is 610-960-3748. Dave, you mentioned David Kittle, who is who is actually an owner of the company, is one of our founders. David is working very closely with me in outreach in the industry, and you could also reach out to David, D. Kittle, at Dytrix.com, and we would love to talk to you. Actually go through a webinar with a live demonstration of the portal so that you can see how quickly we are validating that bank account information, either in batch or by individual queries.
If you could send us some information on some stories of how that are out there. I want to keep our listeners this in the forefront of everyone's mind. And so as you hear reports of wire fraud happening, if you would send them in, I would like to continue to promote what you're doing, Regina, and just get the word out to as many people as possible. So as those come up, would you send those over, and then we'll also put your contact information in our website so people can get a hold. It's just so important. It's just so important. I mean, the American dream can get so destroyed by just one little mistake it is a little mistake, but it has huge consequences. And that's the part that breaks my heart, is you look at consumers that have been dreaming about a home, saved up money for a home, and that money is gone, and that dream immediately evaporates. And I got to tell you, I'm so grateful for what you've come up with. You've always been innovative, Regina. I always just respect you for what you're doing in the industry, and I'm so glad you didn't retire. I'm turning 69 this month, and I am not retiring, and I want to just keep going. And it's those of us that are here to make a difference and continue to give back that's just so powerful. So thanks for taking the time to come on the program, but more importantly, thanks for building Dytrix, all that you're doing to protect this industry and the dream of home ownership. Appreciate you.
Thank you so much, Dave. And I appreciate the invitation to be here.
So good to have you with us, Regina. Folks, we appreciate you tuning in and being here with us. So excited about next week's podcast. I will be broadcasting live from the conference in Seattle at the Lenders One conference. You're going to just love this interview, what's going on. It's an industry update. And then the following week, we're going to have Jake Fairling coming on with Movement Mortgage. So a lot of stuff going on. So excited to have you here, be here with us. A special thank you goes out to our sponsors, Black Knight, Open Mortgage, Finacial, ResX, Warehouse Lending, a division of United Bank, and the MBA, Lenders One, the Mortgage Collaborative, the CMLA, and Velma, and Knowledge Coop, Vidyard, and AI Assist. If you're interested in adding your name to this list of sponsors, get a hold of us. We'd love to have you talk to you about it. Thank you so much, everybody. Have a great week.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.